Yo, what's up, YouTube? Welcome back to another episode of Investing with KJ. This is KJ the Investor. So, as you can see, without further ado, we're gonna go ahead and jump into the portfolio. As you can see right now, we're trending upwards in the pre-market. It's like 8:40 in the morning and everything. The count sitting at $49,273.68. I know a lot of y'all are wondering, like, man, it seems like it's been at that price for a minute, KJ. Like, what's going on? And I will reassure you, I have been adding to the market every single week consistently. DCA, dollar cost averaging. I talk about that on this channel a lot with you guys. Dollar cost averaging, getting into the market, even when it's highs, even when it's lows, it's all good because guess what? We're going to make money either way this thing go. The market goes up, we make money. The market comes down, we're going to make money. It's okay. We're going to continue the dollar cost average as well. But I'm just glad to see a green day for right now. Buying power, $140.49. Right now, cash earning interest is $140.49. Interest occurred this month, $23. I'm sorry. Lifetime interest paid is $55.74. Crypto, I still got 101 USDC, which is the US dollar coin. AVAC, I got a smidget of that. And then if you follow for a while, I sold my Ethereum for a profit to be able to put into some of these other stocks and ETFs. I'm going to take a look at a couple of big boys real quick. I'm going to click on Microsoft. Microsoft is trading right now at $425.95. It is currently down in the market, which is a good opportunity for somebody to buy if you want to pick up some shares of Microsoft. Microsoft also has a dividend coming up. As a matter of fact, September 12th, it just went by. So it actually has a dividend that's already been announced. It's already been paid out. It's just waiting for the market to open back up so it can be reinvested back into my portfolio. $2.77 is the value of that. And I'm going to just tell you, Microsoft is a growth company. It is not a dividend paying. Even though it does pay a dividend, it's not a dividend. It's not known as a dividend paying stock, dividend paying company. So that's why the dividends are so low. I got 3.69 shares of Microsoft, $1,571.74 is the market value. My average cost is $410.44. I am up total return on this position, $56.14. Microsoft is one of those hyperscalers that's going to be buying big chips from NVIDIA in the coming future. They're going to be spending anywhere between $10 and $25 billion on computer chips. So, yeah. Another stock that's been having a great time in the market so far is Amazon. Amazon did some crazy numbers just this morning. But right now, Amazon's trading at $187.08. It is up in pre-market 8 cents, which is 0.4%. 0.04%. If you want to look at the position, I got 3.5 shares of Amazon. Market value is $656.32. My average cost was $159.25. That, of course, is going to go up when I continue to add to this position. Total return is $97.64, which I am actually up 17.48% in this position. Y'all, that's what counts the most, the percentage of what you are up. Because look at this, year to date, Amazon is up 23.45% year to date. And year to date, I am up 17.48% altogether. So I got a piece of that growth in my Amazon portfolio. And as I continue to add in the near future, that is going to continue to grow. Microsoft and Amazon, two big boys in the Magnificent Seven. And if you guys know, like I said before, we enter into the month of September, the market became very volatile, and it's still volatile. We just have green right now. It may go to red, who knows? But when it does go into dip season, it goes into the red, I do purchase. It seems like a lot more. I'm a little more active in my purchasing. Like I said, I buy every week consistently. So I'm in the market 365 days a year. I'm in the market every week, every month. So I'm consistently buying. That's the key. That's one of the keys I want to tell you guys about being consistent. I put in the same amount of money every month. I put in the same amount of money. If not the same amount, I put in more. It's never less. I never drop down less. I always do at least the same or more. But I am consistent with it on the days where I put it in. And so History tells us anytime that you're consistent with putting in money into the stocks or into ETFs, you have a lower cost basis than somebody who was to just jump all in at one time on a particular stock, get cashed out later on, and then, jump all in again at a later date because they want to find all the low points. No, that's not the best way to get the lowest average cost. History tells us the best way to get the lowest average cost is to just DCA, dollar cost into the average, into the market, and just let it average in and let it average out. So that's what I would recommend that you do. Another stock I want to take a look at this morning is Walmart, WMT. That's the ticker symbol. Right now, Walmart is trading at $79.95. Just last night, this stock was trading at $79.75. In the pre-market, it's already up 20 cents. And I said this. I told everybody this. I said Walmart is going to be at $80 before the end of the week. And look at this. It's almost at $80 right now. And we're still in the pre-market. In my position, I have 103.79 shares of Walmart. Market value is $8,298.17. My average cost is $55.93. Today, I've already made $30.10 off this stock, and total return so far, one of my largest returns is $2,492.59. I am up 42.93%. Guys, this is what I'm telling you about. Anything over 8%, we're getting rich. Walmart is a company that a lot of people think, man, you got stock in Walmart, that'll never make you rich. That is false narrative. That's a false narrative. Look at this. I'm up 42.93% in Walmart. And like I said, I've been in Walmart since forever. I've worked there 8 years, so I've always had stock, but not onto this magnitude on what I have now. Year to date, Walmart is up 52.53%. Year to date. But the reason my account doesn't reflect the whole 52, because I've been in this particular position over a year, over 2 and 3 years, is because I had to combine portfolios. I had a Walmart stock portfolio. Then I also had this right here, my Robinhood stock portfolio. And once I combined them both to the Robinhood, that's when they gave me an average out of 42.93%. of being in the market. But I'm in the market every day. I'm buying Walmart every week or every 2 weeks with Walmart. I put the same amount of money in there or more, never less. But I stay consistent with it. I stay consistently trucking in every week, every end of the week into the Walmart. CocaCola. Ticker symbol KO. Right now, it's finally crossed that $70 for another good bit of time. $70.91 is what it is right now at the beginning of the market. I got 30 shares. I got 30.5 shares of Coca-Cola. Market value is $2,165.65. Average cost is $60.12. Total return is $329.52. I am up, guys, a amazing 17.95% in Coca-Cola. This is not one of those tech companies. This is not one of those big growth stocks. This is a value stock, which means Coca-Cola pays a nice dividend. PepsiCo, Coca-Cola, Pfizer, Procter & Gamble, those type of companies, Lowe's, Home Depot, those type of companies, big value companies, they like to pay good dividends out and things like that. And Coca-Cola is a position I've had for some years, and I've built on top of it for a while. And now, I took a little break from Coca-Cola, building it as much as I need to. I'm going to get back to it, but I've been pouring into some ETFs like SPLG and SCHD, stuff like that. But Coca-Cola is one of those positions you can't sleep on, man. I'm up 17, almost 18%, really. Anything over 8%, we're getting rich. You know the motto. So like I said, and I believe by the end of the year, Coca-Cola busts out the $75 mark. So Coca-Cola be hitting 100 by next year, $100 a share by next year. And I want to go ahead and get as many shares as I can before it hits that $100 mark. Because anything I can get right now under $100, I need to be trying to get. So, yeah. What else I got for you guys? Oh, I might as well jump into this one. I got SPLG, the SPDR portfolio S&P 500 tracker, $65.88. Now, guys, the other night, when it was the market was red and it was just blood in the water everywhere, this stock was down. This ETF was down to $63 and some change. I'm not sure exactly what it was. I went to work last week. This was the only thing I purchased consistently, which meant I stayed with this particular stock. I went all in. I put my whole budget into this one ETF right here last week. Every other week, like I said, I've been consistent with the rest of the stocks. And I also did, invest in Walmart, and I invested in, what was it? It was something else. DGRO. But anyway, I made sure I invested in this right here. SPLG. It's the S&P 500. And right now it's at $65.88. I knew it was going to go up. I got 139 shares of this particular ETF. Market value is $9,163.21. It just crossed that $9,000 threshold when the market started going back up. My average price is $60.89. Total return, $694.01. I'm up 8.19%. We finally crossed that 8% threshold with this particular ETF. And like I said, anything over 8%, guys, we're getting rich. And I thank you. I thank God that I was able to get to this point where it is right now. And it's another Friday. So guess what I'm going to be doing today? I'm going to be adding more to this position. SPLG is one of those positions I have to consistently add to every week because I am actively right now building this up. My goal at the beginning was to get 100 shares. I crossed that off. Now I'm approaching 150 shares, then 200 shares, and eventually I want to get it to 500 shares, 550 shares. That's my goal. I want to get it up to 550 shares of SPLG, and you guys are going to be with me along for the journey, on the ride. I'm going to get over $10,000 within the market for this particular ETF because I believe this ETF has the potential to bring back big returns that's going to help us reach our $100,000 goal, and not just that, but eventually financial freedom when we hit $1 million in our portfolio account. Guys, we are on the road to 100K. Not only that, guys, we are on the road to getting to where we need to be. Tag along over into the traditional IRA. It just turned to the red because we have some sell-offs. Look like NVIDIA selling off just a little bit. It's back up to $119. And I believe that thing going to continue to go up. They got big things in the news about NVIDIA. And I'm not going to make this episode about that because it's already at a certain length of time. But as you see, I'm already sitting at $39,516 in a traditional IRA. Total right now, we're back up to $88,809. It was just at $88,860 something dollars. So it'll fluctuate up and down real quick, but it's all good. As long as you stay investing, stay consistent, don't panic sell. And when everything went red like a couple of weeks ago, guys, I did not sell a single thing. If anything, I continued to add to my positions, and my portfolio reflects that. I'm gonna be hitting my goals here really, really soon, and I just want you guys to know that because of the consistency and because of the discipline and because of staying true to myself, staying true to the market, it rewards you by allowing you to have better days than bad. And so you create wealth in the red, you collect the wealth in the green. So that's something we need to always remember. We're on the road to 100K. This has been KJ the Investor. I hope you enjoyed this episode. If you like this, man, go ahead and drop me some likes and comments down in the comment box below. Any kind of questions, concerns, comments, drop them down. Share the video. Tell a friend to tell a friend. And until next time, it's KJ the Investor signing off. Peace. Love you guys.